Morning everyone, welcome to the 24/7. My name is Neha Kavalia and I am with you with the area of AFB and we are covering another set of questions for the examination. So let's move on and talk about a few of them. Okay. In order to get more of our features regarding the classes, regarding the updates as well as our ebooks, kindly go ahead and download our app now. To subscribe to our channel, all you need to do is press the subscription button along with the bell icon to know more about the JAIIB examination. You can use the code Y541 to avail the discount of 77%. We've just come up with the JAIIB 3000 MCQ, PYP 6000 plus case studies. The case studies are going on. The price drop is over, but the case study batch is still there on the app. So what you can do is you can check out our case study batches. The case study batches have started and they've started from yesterday. That means you have all the opportunities to cover up, to take a part in the case study batches, as well as in terms of the batches related to the 3000 MCQ batch also. There are two batches, 3000 MCQ batch, which includes this batch as well. So you can look forward to any of those as per your requirements. Okay, we have also come up with the 3000 plus MCQ batches, which is for both. That means this is for English as well as the bilingual batch. So if you're looking forward to any of these, then kindly go ahead and check it out on our website. Okay, so here comes the first question, everyone. The first question says, in the statement of financial position, we record capital receipts, the revenue receipts, or deferred revenue receipts. When we talk about the term financial position, it means the balance sheet, right? In the balance sheet, what do we record? In the balance sheet, we record the capital receipt, but we do not record the revenue receipt. But the balance of the deferred revenue receipt is also a part of it, deferred revenue expenditure. Okay. So when we talk about this area, deferred revenue expenditure is a part of this scenario. See, the point is that in terms of any amount that we see, if I receive a salary, if I receive a salary, it's not a part of the financial statements. Technically, a business never receives a salary, it always pays. So technically, if you pay salary, it would be a part of the profit and loss account. But if a if any of the organizations receives a loan, that's a capital receipt for them. And if they make a major expenditure which would be helpful over the period of time, then they will call it the deferred revenue expenditure, right? So then when two of these things are recorded, the first and the third one, that would be basically D. Deferred revenue expenditure, for example, the advertisement suspense account. When someone makes a major advertisement expenditure which would be helpful for them over the period of time, maybe say 3 or 4 or 5 years, so what they'll do is they will spread up that expenditure over that period, right? So what will happen is, in terms of advertisement suspense, what's going to happen in terms of advertisement suspense, whatever has been written off this year will be written off. Rest everything would be carried in the balance sheet over the period of time for which it is still left. So correct answer is D. Next question, which of the following concept assumes that the business enterprise will not be sold or liquidated in the near future? This is among one of the basic concepts, a part of module B, which is basically which carries a good amount of questions there. So let's look forward to this question. It says number one is conservatism. Conservatism is being scared. Everybody is scared. So the businessman is also scared. What if I don't get the money in future? So what he does is he anticipates the losses, but he's not allowed to record the profits. It is said once you receive the profit, then record it. But if you have a loss coming up, just record it right away, make a provision for that, and then we'll talk. That's about the conservatism concept. Then money measurement concept. Everything that can be noted in terms of money is a part of the organization. So technically, both of these are not matching with the concept of future, right? That's correct. When we look forward to the answer, it would be going concern concept. Going concern concept says men may come and men may go, but this business is here to stay. One of the basic things that we do is, if I buy an asset, okay, if I buy an asset that is worth rupees 10 crores, say, and the life of that asset is 20 years, right? I bought it with a simple assumption that my business is going to live beyond 20 years. Out of the entire life of that asset, 20 years asset value is just a part of it. That is what the business visions are, right? The basics. That is what they call it. That is going concern concept. Last one is accounting period. That is every see, if I want to study an entire book, I cannot study the entire book in a day. It would just kill me. That's very true. But even if you love books, you can't do that. What will happen? I will have to divide it into small chapters. Rather, after those small chapters, I'll read those small topics even. That would psychologically make me feel okay, something is done. What is that? If I want to study an entire business, I cannot study it in a day. What I'll do is I'll divide it into different small years, a small fraction of time of the entire life of the asset. That would be 12 months, right? In India, we follow the financial year. That's what this particular concept is about. Choosing an accounting period to study the books of accounts. Okay, that is C. Moving on to the next question, the cost of office equipment. This is rectification of errors. The cost of office equipment was debited to the purchases account in error. Now, the point is this. Okay, what kind of error is this? Can you help me out with it? What kind of error is this? There are overall many types of errors in terms of rectification. What is the error that they're talking about? The cost of office equipment. You bought an asset, but it has been recorded as an expense. How this error affects the profit for the year and non-current assets. Such kind of error is called, any ideas? It's called the error of principle. It's called the error of principle. When we talk about an asset recorded as an expense, now think about it. When the asset is taken as an expense, our assets are understated. While because of expense, our profit is badly affected and our profit is right now increased. So basically your profit is right now decreased because of the expenses reduce your profit. So the profit here would be something which would be understated, and your non-current assets, that means our asset is not recorded fully because it has been taken towards the area of purchases. So the correct answer here would be the profit is understated because an expense has increased, while your asset is also not recorded to the full length. That is, we have also understated the assets. Next point, among the following, which is also known as the external internal equity ratio? Current ratio, or the asset test, or the debt equity, or debt service coverage ratio? If we talk about the external internal equity, external means the money which outsiders gave us. This is also known as outsiders equity. While growing up and knowing about the various accounting terms, all we used to listen was that equity was related to the owner's money. But later on, I think I've heard it so many times, especially this is a term which you'll find in international level of accounting a lot. In Indian accounting, they have also adopted it over the period of time, because in the NCRTs you'll never find it. But once you grow up and you get into the basic accounting, then they tell you that outsiders equity is basically the money which outsiders are putting, and insider equity or the internal equity is basically the money which the businessman is putting. So basically, any money which is invested in the business is equity. But if it is your personal amount, which that is you are the owner of the organization, it's called internal equity. When you are taking it from others, it's also their money now. That is where they are calling it external equity. That is your debt equity ratio. This is one of the most important ratios on the basis of which organization can face financial risks. That is, credibility risks are always there. This is also a particular area which determines the financial health of the organization as well. And on the basis of this, even taxation is also impacted, because debt will lead to interest. Interest is an expense. Now this expense will affect your profits. So there are many connecting links for the debt equity ratio. So it is basically external, that means the money which other people are giving, and equity, that means the money that you are giving, right? That is C. Next point, everyone. The objectives of the cash flow statements are. Why was the cash flow statement exactly introduced? Cash flow statement is basically AS3. AS3 accounting standard 3 as per the accounting standards. It has also become a part of the IND AS as well. But in your syllabus, you'll find the AS, right? So when we talk about the AS, AS3 is about what? Cash flow statement. The name itself states that this particular statement is involved in noting down the movement of cash. The movement of cash can be inflow of cash or outflow of cash or no flow of cash. Yes, that's also a thing that you will find. But these, other than these three things, there's nothing else that we'll record. We'll not record a credit amount and then we'll record it. In terms of no flow, what can happen is one cash and cash equivalent changing it to another one, right? So that can also be a part of it. Otherwise, what's happening here is the objectives of the cash flow statement are what? This thing is stated in that particular explanation only. It is for analysis of the cash flow position, or short-term cash planning, or evaluation of liquidity, or comparison of equity operating performance. What would be the scenario? Actually, it would be all. Cash position is a part of it, whatever cash we have. Short term planning, because our cash is required for every planning. For liquidity, cash and cash equivalents are one of the major elements of liquidity area. And operating performance. Think about it, whenever you need to spend a little money in order to get the work done as early as possible and you don't have it, then there's a trouble. If you have the money and then you can get n number of things done without any hustle, that means that will affect your operating performance as well, right? Okay, let's try this one. A firm finds that during the last month of the year, an amount of 3,500 has been received as cash from XYZ, has been posted as 5,300 to their account. Amount was 3,500, now it is noted as 5,300. First thing, what kind of error is it? Undercasting or overcasting? That will determine what would be the nature of rectification of entry. See, the thing was of 3,500, noted at 5,300. That means it is overcast, right? So it is overcast. The entry will be rectified as, see, the first point is received in cash. If I received a cash to XYZ, I received a cash of 3,500. The problem is not the cash is not recorded properly. The problem is we didn't record their account properly. It has been overcast. So what's the difference that is coming up? It would be 3,500 minus 5,300, giving you an amount of 1,800 as overcast money, right? Now, what will happen? No journal entry if the correction is to be made before the trial balance. Then debit the XYZ and credit the suspense if the trial balance has been made. Debit the XYZ and credit the suspense if the, okay, this point is repeated, and then we have all of the above. This point is repeated basically. So then the answer would be B only. And okay, let's go for the D point. I think this entire question needs to be reframed again. Number one, technically, if anything has been done before the trial balance, then you don't have to make the journal entry. I think this point needs a little correction. I'll go for C, right? That would be the point. Okay. Now let's move on to the next question. We'll be leaving that question now. I think I'll reframe a different question for rectification in the next class, and then we'll be talking about it. Okay. Next question. If the interest rate is compounded half yearly, which of the following would be used? In terms of compounding, what happens? Achha. Let's talk about the present value and future value along with that. That makes the entire concept clear. See, if I'm putting money today, why would I put money today? I'll put the money today because I want more money in future. Isn't it about that? So what will I do? It's gonna be P1 plus R raised to power N. I'm putting more money into the business and now I'm getting interest out of it. So whenever we are sitting in present, what are we going to do? We're going to multiply. But do you know, if we are sitting in future and I want to come back, what will happen? Today I have invested 100 rupees. I'll use this formula. I'll multiply the principal with the rate of interest with that particular time period. Then I'll move towards the future. So when you are sitting in your future, this 100 rupees has multiplied a lot. But the point is, if I want to know its value today, how will I come from here to here? I will divide. That's the concept of present value and future value. And yes, it starts from the area of compounding only, right? So then that's why I corrected it. I actually connected the entire story so that you understand that there's a connectivity when we talk about the interest and annuities and then we talk about the discounting. Okay, now coming back, if the interest is compounded half yearly, it is compounded half yearly, which of the following will be used? If we see the formula, this is the formula, but the point is now it is compounded half yearly. The rate should be halved now. Why? Because if the rate is 10, then we are dividing it by 2, it gives us 5% per uh, per 6 months, and then it is compounded twice, so in 1 year you are going to compound twice, so it's gonna be p1 plus r raised to slash 2 raised to power n multiplied by 2. The the time will be multiplied by 2, the rate will be halved. If it becomes a quarterly, then rate is divided by 4, n is multiplied by 4. If it is basically an EMI basis kind of thing, then that is rate will be divided by 12 and n will be multiplied by 12. That's the method that we use. In one particular question, almost every formula of compounding done. Next question, everyone. What is the present worth of 132 due in 2 years at 5% simple interest per annum? See, now the point is you have got 132 rupees coming in future. That is your amount. Then is equal to, we have no clue about the principal. We know about the rate of interest and we also know about the time. But the point is, what is your SI? To do this question, we need the SI. This is amount is equal to that is your interest plus your principal now. So technically if you have got an amount of 132, let's take principal P. So 132 minus P is your simple interest, right? The difference between the two is your simple interest, and since we have no clue about it, so what will we do? So first of all we will solve this area altogether. It would be 10% here, right? So it is basically 132 here, and 10% of P plus P. So basically it would be basically 132 is equal to, I can take the LCM. Now this 100 will be multiplied here and it would become 110 divided by 100P. So the P is equal to 132 multiplied by 100 divided by 110. I'm sorry, it is 120. Correct answer is 120. Next question, everyone. Using the equation method, break-even point is calculated as sales is equal to variable cost, variable expenses plus fixed expenses plus profit. Sales is equal to variable cost plus expenses minus profit. Sales is equal to variable minus fixed expenses plus profit. Okay, let me show you the exact formula that we use here. What is break-even point? What do you exactly mean with the break-even point? The point at which your expenses and your incomes are exactly equal. So that is the point which we talk about, the break-even point, when whatever money I've invested in the business, I'm getting the same amount back. After this, you get after this point, you start making profits. So this is the point which is a determining factor for the organizations, right? So it's basically what the formula that is there in terms of costing. That's an equation that we use in cost accounting. So that is sales minus variable cost is equal to fixed cost plus profit. This is the original formula that is used. So if I have to just move it a bit, this variable cost when traveling across the equal to will become a positive number, right? It will become plus VC, and that is basically A. This is the exact formula that we use in terms of the uh, account costing. So this is what we do. Sales, from sales we deduct only the variable cost, and this is what we call contri. This is also called contribution. I hope it was helpful today. We have just covered all the formulas of compounding, compound interest. Along with this, we are also done with the good part of rectification. Then a few concepts out of, I think, 10 to 12 concepts. We are done with 4 in terms of the basic concepts of accounting. Then here we are done with one particular topic. Then we are also done with the topic of SI today. So I tried to prepare various questions from various parts of our examination that we can cover. So I'll try it in the upcoming classes as well. With every class I'll try to explain more and more, because the countdown has officially begun, right? Thank you so much for being there, everyone. So this is where I would like to end my session. But before I end my session, I would like to share, we have just started with our 200 case study batch as well. How to go to that area and what can be done in order to get the discount, right? So let's go ahead, because I believe if we can get these particular courses at a price which is helpful for us, because again we're putting money into something at just the end, so that should be worth it, right? So let's go ahead and I'll just show you what can where can you exactly go in order to know more about our just that I've just started. Okay, so this is our channel. This is our website. So what you can do is Adda 24/7. You just have to click on it. It is adda247.com. So just come down in that particular area is you will find the details of JAIIB and CAIIB, right? So this is for the bilingual CAIIB. Then this is English area, right? So all you need to do is click on English. Here you will find the batches that are going on. See, these are all the batches. You can take the combination of these 3, as well as you can also look forward towards the revision batches. I have also, okay, this is the area for 3000 MCQs. Then this is for the 600 case study batch, plus the power pack revision batches also here. Plus you can also take it individually depending upon your requirements. Overall, I think 600 case study batch is definitely a win-win situation. Then if you're looking forward towards a complete preparation, that 3000 MCQ batch is your area, because in this area what will you get? 3000 plus MCQs, plus you also get 600 plus case studies included in this. The timings are specified, the planner is also there. All you need to do is you can use the code by 541, and then you can apply it. You will get a discount. This will cost you 2799.80. So if you're looking forward towards a 3000 plus MCQ batch, one of the basic areas you can look forward to is this. At this point of time, you're getting 80% of discount. If you're doing it through your app, then you can get the discount of up to 81%. So just download the app and you can use it. And currently 81% of discount is going on, a very good opportunity where you can get all these areas at a price which is lesser, right? Okay, and along with this, let me show you the other part as well. If you're looking forward to what's the power pack revision batch, that is also there on our area. And if just the yesterday we have started with this particular batch, that is the 600 case study batch. All you need to do is click on the area of buy now, and you can use the code Y541, and you have to apply it, and it would cost you 1299.80. So that is one of the areas where that you can look forward to. But as if anybody is looking forward to what's the complete MCQ, this batch has got more areas, as it has got also got live and video classes. So if you're looking forward towards the content videos to refer any particular area which you feel you are weaker at, So then you can also look forward to that. Anybody who's a part of our courses already, then they can take up any of these batches, because that will be helpful in terms of MCQs as well as the case studies area. Overall, the 3000 MCQs batch also includes this particular batch of case studies. So that means you're a part of two things there. So it's a more win-win situation. Along with that, the Power Pack revision batch would be there just before the examination, where we are going to cover the major topics in a very limited period of time, because again, limited time period would be left and you would like to revise more and more things along with that particular time period. So countdown has begun, everyone. It's 1 today. Give your best shot, and because this is again the last opportunity before the changes that we can look forward to. Just take it as the only opportunity that you have and just give your best shot, because ultimately, why to compromise, right? So we'll be meeting day after tomorrow at the same time for the class. So let's meet up. Thank you, everyone.